G'day expats and welcome to another episode, Expat Chat, episode 86 today. And as always, joined with my co-host, friend, colleague, business mentor, all of the above, I should say, Brett Evans, who is the Managing Director for the Europe, Middle East and Africa region. G'day, Brett. How's the sandpit treating today? Must be getting warm.
Mate, it is. It is. It's here now. We don't have those cycles of hot and cool. It's just hot. So saying that, cyclone sitting in the Arabian Sea right now, so we'll probably get a bit of weather from that. They even talk about a 30% chance of rain today.
Yep.
People who tune into the podcast regularly must think we're weathermen because we always start with weather.
Hey,
But
you know what they
Aussies
say
love to
about
talk weather.
forecasting?
Yep,
Forecasting is the only thing you should do when it comes to, no, weather's the only thing you should try and forecast these days.
exactly.
Hey, it's funny that I'm in a puffer jacket and I'm on the
I
Gold
saw that.
Coast.
Yeah,
So
yeah, I know.
this morning it's been quite fresh to be honest. But anyway, I'm not used to it usually
No,
in the hot sun, so it's different.
exactly. And to the folks out there listening to my colleague is James Ridley, who's the Managing Director for the Asia Pacific region, runs the Gold Coast office and does amazing things for folks in the Asia and the Americas. So, mate, let's get the show on the road today, continuing with the theme of ChatGPT, doing a bit of
Yes.
research for us. We're going to go through the next 5 questions that ChatGPT recognizes as the most popular questions. As a bit of a
Cheers.
side note, I found it quite hilarious that I wouldn't call them a competitor, but a person who likes to think they're on the same milk as us in terms of servicing Australian expats, pretty much copied our last episode within a
Oh,
day.
it's not just it's not
It was
just our
just,
last episode, mate. There's
yeah,
good strong history there of
yeah,
content being control copied. So I mean, anyway, we
yeah.
must be doing something right when it's a bit of it's a form of flattery, to be honest. That's how I
Look,
treat
it
it. So I
is.
appreciate that.
It is, but yeah, the fact that the guy's not even Aussie licensed is another question. But anyway, I go down the
Yeah.
rabbit hole we don't need to go. So, guys, let's get the disclaimer out of the
Chat.
way. All the information
Yes.
that we're about to have a chat to you, good folk, about should be construed as informational entertainment purposes only. Don't take this as personal advice. Please speak to a licensed, underlined licensed professional who has
Mm,
match fitness with respect to expat issues, like Atlas.
absolutely, mate. Well, let's dive into it. Chat GPT, our friend. Another 5 queries and questions that they've thrown on us today. Let's jump into it. What are the investment options available to Australian expats and how can I manage them effectively? Very broad question. What are the investment options available to Aussie expats and how can I manage them effectively?
I think they're probably referring to what we classify as non-taxable assets. So shares,
Mm,
managed funds, ETFs. If it was
yep.
property, obviously you can buy property, so that's not an issue. So let's
No,
just
that's right.
try and give as much value as possible. Let's focus on the investment options with respect to shares, managed funds. There's 2
Mhm.
answers to this, and we actually had our end of financial year tax webinar yesterday, and this came up quite a bit as well too, because there's a bit of confusion there. So let's provide a bit of context. In
Mhm.
terms of anyone, not just an Australian citizen living overseas, but anyone living overseas, they can invest in Australian assets as non-taxable assets, shares, managed
Mhm.
funds, ETFs. As far as the providers are concerned, how you execute and manage those investments, that's a totally different kettle of fish because they
Mm.
have their own internal policies. So when they,
That's right.
you approach a ComSec, for example, and they say, no, we don't do expats, that doesn't mean an expat's not allowed to invest in Australia. That just means you're not allowed to use ComSec because of their own internal
That's
rules. And we've gone through this ad nauseum in terms of, rules and regulations are governing the world these days, and a
mm,
lot of the providers are making it more difficult. So what we're
mm,
finding is platforms, um, discount platforms, because they work on low margins, they're saying no thanks to expats. New ones are being added every month to the list that we've already got. And the only options really available now in a choice sense, what we call advised accounts.
mm.
And to explain to folks out there, yes, it is more expensive than a discount account because there's an advisor attached to your account. But the
Yep.
reason why those platforms allow you to use that platform is because that advisor knows that client. So if I'm talking to Frank in the UK, I know Frank's background. We've done statements of advice. We've done AML checks and sanction checks, and we know probably more about Frank than his family does when it comes to his personal situation. But what we can also say, his name is not Mohammed, he's not in Kabul, and he's not providing terrorism financing to the Taliban.
That's right.
Whereas if you work with a ComSec and ANZ Stockbroking, CMC, NAB Online, you know, you call up the call centre, they don't know you from bar of soap.
No.
So from their point of view, you are a risk. But from our point of
Yes.
view, working with an advised account, you're a known. And that is probably it in a very succinct sort of answer.
Yeah, I agree. I mean, we could take it a step further and a dot point off to the side. You know, a lot of platforms now are also crunching down on US tax residents, so
Yep.
Aussies in the US, mainly due to the Common Reporting Standard, or CRS. But ComSec's one of them. Happy to name a shame. If you're in the US, your ex-tax resident, they find out, they want you off. A lot of countries are on that list now. With a lot of those kind of platforms, they just don't want to borrow soap if you're from. So just bear in mind that if you're getting funny letters, those sort of things, it's just because they want you off because they don't want to have to send things to the IRS. So
Yep.
it's pretty standard, to be honest. But I mean, in terms of investment options, well, yes, Aussie expats, they can invest back in Australia. You know, the investment list is quite long. You know, you got property back in Australia, you got direct shares, you got ETFs, you got managed funds, you got Australian real estate investment trusts. Caution beware if you're in the US, just regarding P-fixed. Won't go into it today, but you can invest back in Australia, especially it makes sense if you're going to be ending up back there and returning there and retiring there. Absolutely. Keep growing that
It
wealth
comes
in the
back to
AUD.
what you can invest in is essentially what an Australian resident invests in. How you
Mm-hmm.
invest is differently. You know, tax
That's right.
considerations,
Yep.
jurisdiction,
Yes.
platforms, that's where it gets different, more complicated for expats. So, but I think we
That's
did that
right, mate.
one there well,
Yep.
did it a good service. Let's go on to the next one. How do I ensure that I'm maximising my retirement savings while living abroad? Right? What are your thoughts there?
Yeah, it's a good one. I mean, personally, there's many different ways that you can maximize your retirement savings. Often when we're overseas, back in Australia, well, first of all, before you leave Australia, ordinarily if you're employed, you've got an employer right now putting 10.5% in your super automatically through your usual pay contract. Often when we head abroad, we might not have that same kind of offering, especially if you're in, some Asia Pacific countries, Singapore, those sort of things. You don't often get an automatic employer contribution going into some sort of super fund. I'll let Brett talk about the Middle East and dues and end of gratuities or end of service gratuities, all those sort of things. The US, you do, but you got to opt into it. Your 401ks, your IRAs, those sort of things. Canada's similar as well. If you don't opt into them, no one's putting that 10, 11% aside. You can still contribute to super though. If you're obviously in Singapore, if you're throughout Asia Pacific, absolutely, you have no issues with contributing to your Australian retail super fund, not self-managed super fund. You shouldn't do that because you'll breach the active members test. But if you've got a standard retail super fund, you can still contribute to that, whether it's concessional, non-concessional, and that's how you can still make sure you're maximizing your retirement savings whilst you're away, because no one else is contributing in that super fund whilst you're abroad, and that is worthwhile giving some due consideration. A lot of the time when expats have been overseas for 10, 15, 20, 25 years, whatever, a lot of their wealth has been built up outside of a super, yet super is the most tax efficient retirement vehicle in the world.
Yeah.
I'm happy for you to contact me and prove me wrong. I'm happy to have that discussion. The benefits really come when we're in account-based pension mode. Tax-free earnings, tax-free income, franking credits refunded at the rate of 30%. That's terrific. We don't see any other retirement accounts around the world that are like that. So it is something that should be given some sort of attention rather than trying to squash it all in 2 or 3 years out before you retire. That's not the right strategy.
Totally agree. And I think, as to whether you contribute to super or not, it is a personal question. I have 30-year-old clients who contribute and I have 50-year-old clients who don't. And they each will have their own reasons and the reasons why. I think at the high level, in terms of when you classify it retirement savings, that doesn't have to be actually in a pension account. But as long as you're putting away up to 10.5% of your income, you are not at a financial disadvantage compared to your colleagues back in Australia. If you are
absolutely
contributing less, then guess what? Financially, you're going back because those people back in Oz, whether they like it or not, 10.5% of their salary is being put away into super. Now, in the Middle East, we've got dues, end of service benefits, gratuities, and those sort of things. They aren't at the same level in terms of percentage-wise or dollar-wise in terms of a super fund. No. They go some way, up to 5-6%, depending on who you are. But when you go back and take a step back and look at everything else, you need to be doing more. Now, that could be through an investment account. It doesn't have to be through super, and you can put it into super as a non-concessional contribution down the track. But just do something. there's actually, it's quite humbling to see we're meeting a lot of new folks arriving in the Middle East at the moment from Oz, and they're all being very proactive and knowing that they don't want to get drunk on the lifestyle and change their life too much, so that their adjusted cash flows don't adjust for their new lifestyle. So it's good. They're getting on the front foot early, saving early, and then everything else sort of adjusts from there. But certainly, just to answer the question, how do I ensure I'm maximizing retirement? Make sure you're saving. It's the high level thing. And then how you deal with it through super investment, it doesn't matter. As long as there's a pathway, then definitely do it.
Mm-hmm. I think we've addressed that one, mate. Let's move on to the next one.
Yep. You go.
Yeah, mate, I'm on to it. Are there any tax treaties between Australia and my current country of residence that can help me avoid double taxation? It's funny how ChatGPT has said my current country.
Yeah.
It's becoming self-aware. But with that in mind, are there any tax treaties between Australia and my current country of residence? I mean, obviously, summary, yeah, there are plenty of tax treaties between Australia and a lot of countries. I don't know the list off by heart. No, Brett, what about you?
50,
you know that list?
50 odd. I don't know the list off by heart, but I know there's 50 odd, I think. Or might be more.
No, yeah.
I know there's about four new ones coming through the pipeline as we speak right now. So they're always being changed. If you want to know, I'll give you the quickest way to Google it. Just type in DTA, your country of residence, and Australia. So in the UAE, I'd write DTA, UAE, Australia, and you'll go straight to a list. If it's on there, if it's not on there, it won't be on that list. And there's an Australian government list. So very quick and easy way to work it out.
That's right. And I mean, a treaty is obviously there to ensure that you're not being double taxed, as per the question. Often it means there's a sharing of tax credits for tax you paid in one country to take over and use on the other country. You will never be able to get a refund out of a country for tax you've paid in the other country. So, and it's a question I actually often get, Brett, you might get the same where, oh, hang on, because I paid the tax there, but the overall tax is actually less than that. Will I be able to get a refund from the ATO for the tax that I paid to the Singapore IRD? No, unfortunately not. It's just a case where you've wiped out that tax payable on the Australian side because of the tax you paid in Singapore, as an example. Tax offsets.
Spot on, mate. Spot on. I think that's the other one too that caused a lot of confusion. And I think the word DTA and the phraseology is going to become more popular as we consider these new residency rule changes that Canberra's mulling over. Certainly, if you have a DTA, you have the tiebreaker clause that provides protection about double taxation and residency. So I think that one there will be a popular one going forward. And let's run on to the next one. Should I maintain an Australian bank account while living overseas, and how can I manage it effectively? I mean, you sort of have to have one. And I tell a lot of clients, don't try and open up an Australian bank account while you're overseas. You can't do it. You can set up an account that can take credits, but you have to go into a branch within a certain amount of time to do the ID, KYC.
Yeah, that's right.
That's nonsense. So
that's right.
People, it's funny how some people go scorched earth when they leave Australia, become an expat, thinking they have to close out everything. And then they turn around 6 months later and go, oh, how do I do that? I had a guy, a couple actually, who I was talking to in Toowoomba, about to move to Saudi. Their accountant in Toowoomba recommended they close out all their accounts. Problem is they had 2 investment properties. I said, well, how are you meant to receive rental income? And the accountant said, well, just transfer it overseas. I said, no, that's not practical.
Yeah, no, that's good logics there. I mean, obviously everyone's going to have an Australian bank account. Very likely it's you put yourself down as a non-resident account for non-resident withholding tax on the interest income. Only one bank I'm aware of that doesn't like non-residents. That's ING. I don't know what's going on in terms of them internally. It's the same with their super funds as well. Bank accounts, loans, all those sort of things. But that's the only bank I've come across where they just don't like non-resident Aussies. But yeah, I mean, you should obviously maintain one because you're likely to have other things going on back in Australia. Last question.
Actually, just before we go further, one thing I get asked often is, do I need to keep an Australian mobile number to use your Australian bank accounts? I can't speak for all of them, but I know we bank with CommBank and I don't have an Australian number. So the two-factor authentication, all those passwords actually come through the app. So when you are looking at doing that, talk to your bank about how that process works. CommBank have my Dubai number, but all those passwords just come through on the app. So whether you need to keep an Australian
Right.
number as well as a bank account, it's everyone's personal choice, but go
Yep.
from there.
That's a good point, mate. I mean, a lot of SMSFs with codes, 2FA, if you're using an authenticator, all those sort of things should be fine. But I think the most common one's probably MyGov actually still. Everyone
Yeah,
runs
you
into a
can
bit of a
turn that
hurdle
off,
there.
but a
Yeah,
lot of
you
the other
can.
banks
Yeah,
too are using Google Authenticator and those sort of things. So
yeah, that's right.
and it's becoming more difficult now to retain Australian numbers cost-wise. So
Yeah,
let's crack on
absolutely.
to the last question for the episode.
Yeah, how can I protect my assets and investments in Australia while living abroad? Good question.
So
Good question.
protection-wise, do you reckon it's wills and estates, or
I would see it as probably two different forms. So absolutely. I mean, if you've got assets back in Australia, property, investments, those sort of things, you've got a family, you need a will. You need an estate plan governing what's going on there, especially if something happens to you while you're abroad. That's a really good way to protect your assets to make sure that there is essentially a roadmap governing how they're going to get to the beneficiaries and your dependents. So that's part and parcel. Other side of it could always be insurances, whether it's some sort of life insurance, whether it's income protection insurance, disability, trauma, or critical illness, those sort of things. That's a way to protect your assets in the event something happens to you. Depending on the country that you're residing in, if you've got assets and accumulated assets there, you might need a will there as well. I mean, you look at the UAE and the Middle East, and things might have changed now, but usually if you've accumulated some assets over there, you need a specific will governing those assets just in case, previously because of Sharia law and those sort of things.
yeah, depending on whether you own, if it's Dubai property, you need to have a will in one place. If it's not Dubai property, you have a will in another place. But I think the high level stuff with wills and estates is essentially you have a will where you have physical assets
Yep,
or assets, in general. So,
that's right.
certainly you can use a binding death benefit nomination side super to
Mhm.
provide that quasi will type effect in terms of passing on your assets in terms of super assets. Um, Obviously, one of the reasons why I like having joint investment accounts is if something happens to one party, the other party inherits it by virtue of being
That's right.
survivorship.
Yep.
So there's simple ways you can protect it, but also
Mm.
a will at the end of the day is the probably the best approach if you want that rock solid sort
Yep.
of solution that gives you that peace of mind.
Yeah, absolutely. Couldn't agree more, mate. And I mean, taking that sort of a step further with wills, often you might come across firms that sort of promote a world will or world estate plan. It doesn't exist. So, so there is no sort of universal legislation which governs multiple countries under one binding piece.
Yeah,
Just bear that in mind. That doesn't exist. It's more so a case where you're going to have just individual wills and that's it. Um,
exactly.
so yeah, you have to take away.
Mate, I think it's a great spot to leave it on there. So nice, quick, succinct episode. So let's wrap it up there. I'll thank the folks. Just a bit of housekeeping, guys. As always, please rate and review. It helps other expats find it. As you know, we do this stuff to educate and inform. So if you want to help your fellow expats out, just give us that thumbs up. If you're in YouTube, on the podcast, just like and subscribe as well. Reviews always well appreciated, and
Mm.
we'll catch you on the next episode, James.
Sounds good, guys. Thanks for listening and tuning in today, Brett. Catch you on the next episode.
Cheers. Thanks, mate.